let me jump in here and kind of restart and level set us and get us into this kind of conversation we have coming up here. We were joined by Matthew Tuttle. He is a really great person in the ETF space. Thinks very differently than a lot of other people. He launched popular stuff such as SARK, the inverse Cathie Wood ETF, and a bunch of others. And there were some really fun and interesting filings recently that I'm excited to dig into. But you definitely think differently than a lot of other people in the space, and it has put you at your own little niche in there. And I always love watching and hearing the filings that you are looking at. I also asked for ETF Hearsay Henry Jim, who is just tracking all this stuff like a madman, to come on here and join in this conversation. But I'm excited to hear kind of your thoughts on ETFs, these recent filings that you put out, which we've talked about a little bit, and some other stuff that we got going on here. But appreciate you joining us. Would love to start out here by just, if there's anything I missed there, on kind of introducing you and your kind of split place in the ETF arena.
No, I mean, I think from my standpoint, along with what you said about being different, I'm a trader at heart. I've been trading in the market since the early '80s. I love trading. I sit around all day and trade. So I look at the ETF space from that landscape and try to launch products that I want to trade myself. And then the other part of it is I'm not afraid to piss people off and ruffle some feathers. Yeah, the people at ARK don't like me. I'm blacklisted on CNBC because of the Kramer thing, but it is what it is.
Hey, when it works out, you get the haters coming around you, and definitely a couple of these ETFs have gone pretty big. So shout out to that. It's good timing with a lot of these launches, but there were, like I said, there was, yeah, Brendan?
I would say when you press on the right nerve, the reaction is usually, something like that. So it means you're pressing in the right spot, usually.
Yeah, I mean, I think it was Bill Cosby who once said that the key to failure is trying to make everybody happy, something along those lines. So, I think if you're pissing some people off, then you're doing something right.
Now, in regards to pissing someone off, I agree. Do you believe the same to be true in like the attempt to spin and some of these up that maybe you'd be willing to admit don't have, like, maybe not, maybe won't work out, right? Maybe won't track the way, but like you said, being a trader and wanting to trade these products, the goal is to like try, right? And see if others are interested, right? Is that part of the mentality, or is it a lot of like, true belief that like this product should track this perfectly and that is, the goal? Or is it experimental, sort of like the way we all trade, which is like you got to dabble in something to begin to try it anyway, right?
So I think it is a lot along the lines of the trader mentality where you've got, when you go and you buy a stock, you've got a thesis and you see a pathway towards that trade being successful, but you fully realize it may fail miserably. And I mean, same thing when we launch an ETF. I mean, my Kramer ETFs were a perfect example. I launched those because, I mean, there are certain things I feel about Jim Cramer that nobody was calling out that I felt, had to be called out. But I thought, I saw a pathway to those products being very successful. But the timing didn't work. Kramer went full in on the Magnificent Seven, back before NVIDIA's earnings last year that started this whole run. So, hey, it wasn't going to work out. We just filed for like 40 something single stock ETFs. Now, we may not launch all of them, but I'm going to launch the ones that I think will work out and be successful. But you never know. I mean, we've got, Apple, Microsoft, and Google we did in the single stocks, and they're all sitting around, 8 million each. So, from an ETF issuer, I mean, they're doing what they're supposed to do. From an ETF issuer standpoint, they haven't really caught on yet.
Yeah, and
Yeah, those
forgive
things
me
are.
forgive me if I ask super personal, but like in the ETF space, like between 10 to 50 is when you start to get like a product that
I
starts
think
to
it's even
become,
higher.
right? Like
These things are
I would say,
expensive to do. It's
right,
probably
right.
closer to that 50
I
number
was right. I was saying
minimum.
10 to 50, you're getting there. At 50, you're a business, right? Like, is that
For
like the
us,
range?
it's lower. I mean, every ETF platform is different, and they're going to range in how much it costs. For us, I'm probably profitable somewhere in that 15 to 20 million range.
As a
So,
result of family of funds, right? Like, and Breakpoint.
no, I mean, we just know. I mean, I've been doing this for so long. I know the lowest cost providers. We know how to get an ETF out for the lowest cost possible.
I see we got Mr. ETF here say Henry down below. If you hit that request button in the bottom left of your screen, it will bring you up here. But Tuttle, Mr. Tuttle, I want to talk about some of the two kind of sets of ETF filings that we had coming out recently. The first one around this congressional trading ETF, which will hopefully trade under the ticker NPEL. Hoping to kind of get the returns of those people in Congress and their spouses. I'd be curious to hear kind of the back end structure of this ETF because we know they delay the filings from a week, 2 weeks to a month or whatever it is, and there's a lot of different amounts they're buying. So I'm just curious to hear more about this ETF. I have a couple more specific questions about it, but just want to get the thoughts on the Congress trading ETF that you guys filed for.
Yeah, so and you may have noticed that a couple other ones launched. I don't know how long they've been out, a few months. And I saw those filings, and what they're doing is they've got one for everyone on the Democratic side and one for everyone on the Republican side. And I think one of them has like 750 holdings, the other's like 500. And I looked at that and thought, that's kind of stupid. I mean, just because you're in Congress doesn't mean you're trading on inside information. And this is a nonpartisan issue. You've got Democrats and Republicans who are doing this. So where I look at it is you have a group of people in Congress who are obviously trading on inside information. They're generating returns, doing this part time because they do have full time jobs that rival the top money managers out there who are doing this full time. You've got people who are chairing committees trading on stocks that they oversee. Again, obviously trading on inside information. So, yes, we get their trades on a delay, but just like when you're looking at 13F filings, if you had a strategy where you were looking at the 13Fs of the top money managers out there and picking off their best stocks, you're going to beat the market. I think there's still a lot of alpha in only focusing on the Congress people who, again, it's fairly obvious are trading on information that the rest of us don't have. Yeah, we're getting into those trades a little bit late, but to me, if you've got a guy on a committee, overseeing XYZ stock and he's buying it hand over fist,
Yeah, in size.
that's a trade I
Like,
want to get. That's a trade I want to get into.
So how do you kind of go in and figure out or calculate or whatever it is the people who you think actually have the signal? There's a lot of noise that's going to be coming out with these filings, as you said. The ones that have tried to do this, they're doing a very different approach where they're kind of holding everything at those 500 to 700 stocks or whatever it is. How do you intend to get rid of a lot of the noise in this strategy?
So I want to focus on a few select Congress people, obviously Nancy Pelosi being one, but not all Nancy Pelosi because I don't know how old she is, but she's not young. She's not going to be around forever. But I want to focus on a few select people, based on number one, the historical returns of their portfolios, which is information that's all out there. And then, number two, what committees they're on and are they trading on those committee stocks? And I want to try to have a portfolio that's about 50 names or so. Fairly concentrated, only the top guys. And, I don't care about the freshman congressman from, Idaho who's not on any committee, who's buying whatever. I mean, that guy is of no interest to me. There's a top group of, let's say 10 or so people that those are the ones I want to focus on.
I am curious on kind of like the back end of this because you put this out there and some people might think, okay, they're just copy pasting, trade it over, but there's a lot more that's going into this with research of knowing what committee these people are on, what kind of stocks they're trading, how the return is doing. So I'm curious about the kind of back end research aspect of this and kind of how you expect how much time, effort. Is that something that you expect to just be something that you guys are able to solve pretty quickly and just get someone on it and do? Or is that something
Yeah.
that you actually think will take a good bit of time?
Well, no, I mean, it's going to take us time to do. I mean, it's not going to be a simple index fund, but, I'm used to that. I mean, you can't imagine all the crap we had to deal with doing the Kramer funds, and not just figuring out, hey, which stocks are we going to buy in short, but then the back end compliance. So I'm used to doing stuff like that. I'm not, you know, a lot of people just do, simple run themselves index funds. I'll do that if it makes sense. But, I love, putting in the effort, trying to come up with, a really, really good product. And I think this has the potential to be a really, really good product.
I think so too. I think the way you guys are doing it too is a little better than what's out there. I'm excited to see how it actually gets implemented, and obviously we'll be tracking it. Like a couple of your other ETFs, the tweet about the announcement of it coming out just went viral, and I think we kind of knew it would. But people are excited for this type of ETF, so I'm excited to see how the back end develops.
Yeah, and
Uh,
again, I am too. I mean, when I saw the others come out, at first I was like, all right, cool. And then I started looking at it, I'm like, this, it seems more marketing than really, hey, I want to extract the alpha that comes from, Nancy Pelosi and people like that. So yeah, I'm excited for this stuff.
when you're doing this and thinking about it and getting excited about it, what's like the biggest, I don't know, downside or thing that scares you or something? And what's the biggest kind of sticking point for you in doing this ETF? That when you kind of envision where we end up getting to, what could even, yeah, what could be the problem? Is it that month in between when they file? Sometimes is it something else? Yeah, I would love to hear your thoughts on that.
Yeah, I mean, sometimes, when you file for stuff, you've got concerns. So, like, I'm still sitting on my three anti ESG ETFs that I have not been able to launch because I'm getting censored. And, and I got censored every step along the way. And, every time I thought, all right, I finally gotten through everything, then something else happened. But I knew that those were not going to be easy in this environment. I'm not worried about this one from an SEC standpoint because people have already gotten it through. So I mean, there'll be comments, but there won't be anything insurmountable. Yeah, I'm not worried about it from a lead market maker standpoint and all that. So it's really, the same when you launch any ETF is, hey, are we going to get to, that critical mass? Um, but, even then, we're at a point now where at like 1.2 billion, if we've got some ETFs that are bleeding, it's not that big a deal. I do want it to be something, where I see that ultimate pathway where, it gets to be, something that's successful, well received, profitable, all that. So, I'm always concerned about those things.
Yeah, my internal clock with SEC stuff is 90 days. So, well,
75 days for the SEC. Unless it's something more complicated, which I'm not expecting here. they're, they'll want some more details, I'm sure, on how we do things, but I don't think it'll be that big a deal with the SEC.
We keep an eye. It's been a couple days, so we might be in that like 2 month range. I want to shift the topic a little bit to some of the other ETFs that you and RexShares came together. That T-Rex offering that you guys family of single stock leverage ETFs, which actually, congrats, has more than $1 billion AUM in those, so that's exciting. Nvidia is quite the stock recently, but I was very intrigued by these filings because we haven't seen 2x single stock leverage ETFs for names like AMC, GME, Supermicro, Dow Jones Transport. No, I'm kidding. That's the DOT, the Trump company. But so these single stock leverage ETFs are really made for advanced traders who know what they're doing, and they can be fantastic tools for that crowd of people. But like as I've kind of talked with some of the people doing these ETFs in the background, they've stayed away from these type of names because of the risk underlying it, and there was always kind of stuff around volatility and why they were maybe avoiding it. I'd be curious to hear kind of your thoughts on that and how some of these ETFs on a name like a Supermicro, a GME, AMC might actually kind of work in the real world.
Yeah, so there's a lot of stuff. So when yeah, I love the fact that the single stock space just seems to keep growing and growing and growing, because I do believe, and people criticize it. Well, it's not an ETF; it just has one name in it, and this is risky and all that stuff. I mean, these are a tool, just like everything else, used by people who know what they're doing. They're no riskier than anything else. Used by someone who has no idea, yeah, I mean, it's a risky thing. And I look at it from kind of two standpoints from an issuer. Number one, what are the stocks people like to trade? And then number two, what are going to be the next generation of stocks people like to trade? I do foresee that from our standpoint in working with swap counterparties, that AMC and GameStop could be complicated. And quite honestly, we're dealing with that with NVIDIA right now, which is really interesting. The capacity that we're able to get swap on NVIDIA is, it's getting difficult out there because of all the NVIDIA products, how much NVIDIA is going up. And every day is kind of a, beg, steal, borrow, where we're going to get NVIDIA from. And I would expect that AMC and GameStop from time to time, when they're running, is going to be the same type of deal. So, it's a matter of having multiple counterparties up and running, thinking ahead where, some counterparties might be a no on those names today, but, when they see everyone else making money 3 months from now, maybe a yes. So, operationally, those are not going to be easy for us to run. But I've been doing single stocks from the very beginning of them in the U.S. We'll figure out how to get those things to work.
What about the kind of names that I'm seeing on here that are maybe a step down from those, but are kind of still classified as FinTwit favorites, cult type like names? Maybe move a little bit less. I'm talking about the Palantirs on here, the Robinhoods, Marathon Digital, even a Shopify and Arm Holdings. There's a lot of interesting ones which I think are a step down from those like really crazy movers, but I think kind of fit the ethos here, and it might be a little bit easier first. Is that kind of the sweet spot of names you think from this filing, which you'll end up bringing out first, or kind of what's the strategy there?
The strategy there is, we are 3 months or so away. So as we get closer to the time, we look through that list and decide, hey, what makes the most sense? And what I'm trying to figure out is, what is the next NVIDIA? Not from the standpoint of, the stock that's going to be, the next biggest stock in the market. But from a single stock marketing standpoint, the majority of assets in the single stock space are now in NVIDIA. But when we started out, it was Tesla. And, so what's that next stock where we launch the single stock name, the single stock, and all of a sudden it gets popular? Great example, Granite Shares did Coinbase. And for about a year, that languished. It had no assets in it. And then all of a sudden, Coinbase is in the news. I don't know what it's got in it now. I think at one point it got to like 700 million or something. I'm trying, what's that next stock? And those names you mentioned, Robinhood, Shopify, Palantir, the SMCI, those are names that I think could fit into that space.
Have you ever thought of
Yeah,
doing like a pair, like where it's long one against another as a product?
We've thought about it. My sense is that these are designed for sophisticated traders, and guys on this call, you want one name. You might decide, hey, I want to trade NVIDIA, I want to trade ARM, I want to trade Hood. Do you want to trade a pair of names? I don't see it. The only place I see it is if you've got like a very narrow theme, like the weight loss theme, where, really there are only two names. There's Lillian, NBO, where maybe you could do an ETF that's 50-50 those names. Maybe, some sort of, long one area, short another. But those themes come and go where, right now, maybe you might say, hey, the NASDAQ's gone crazy and the Dow's languishing. At some point, the Dow's got to come up. Maybe I want to be short NASDAQ, long Dow. But that's, you may think that today, 2 months from now, it may be something totally different. So that's why I've focused on the single names. If if someone ever brought me a great idea with more than one name, I would look at it. But I just feel like the sophisticated traders, hey, I want this name. I don't want it adulterated with other things. And I think Roundhill has seen this. They did the 2X Magnificent Seven, and I don't think from an asset standpoint that's gaining any traction because, again, if you're a sophisticated trader, you don't want to be trading all seven of those names. Like a lot of guys on FinTwit right now hate Tesla. So, that's why we haven't done that.
Totally understand that. I was just thinking of it from the perspective of like the people that like an idea but don't necessarily know how to execute that type of trade usually look for an ETF like product to do so. And I know for some a pairs trade might be hard to like execute and figure out. That I thought maybe it was like an area where you're solving an issue for someone.
If I had a good idea on there, I would do that in a heartbeat.
Thanks, appreciate it.
Kevin, you got your hand up?
Yeah, kind of expanding on that. I mean, it would be, I think probably one of the popular ones that probably would gain a little bit of traction, especially for institutional traders, would be the pairs trade of the SPY and what is it, RSV or whatever, the equal weight S&P. So maybe, RSP. Yeah, so maybe like
that's
maybe not single stock. Yeah, not maybe like the single stock because I'm right there with you, man. Like. I don't think that's going to really attract anything, attract major dollars, sticky dollars. But you could have institutions or traders that would say, hey, I want to go long SPY, short.
That's exactly what I had
the equal weight.
Yeah.
And then you maybe have it for different pairs, right? Like long Q, short SPY. Like those would actually be very interesting. I mean, that theme has been.
Even could you do it with factors?
Yeah, but the factor that gets a little bit difficult.
Tough,
I mean,
yeah.
and Matt can kind of talk about this. I mean, he runs the ETF, but when you're starting looking at factor trades, then people are going to also scrutinize weightings on those factors, right? And like, which one are you picking the right one? Where you could just keep it simple and say, hey, this is SPY, RSP, like this is it, right? Or if you wanted to do something else, I just thought that might be something that's pretty cool, but.
I mean
This is not a
that
product
is
suggestion source portion here. I'm just throwing that out there.
no,
I mean, if you kind of see
that's
that,
an interesting idea where it's basically, hey, I'm saying that, there's alpha in a market cap weighted index, and certainly there are market forces that, seem to keep SPY or, the market cap weighted version doing better, but you're hedging out your overall market risk and just extracting that alpha. I mean, yeah, that's an interesting idea.
yeah,
I,
and
I
I mean,
guess
everybody and their mother has been posting the equal weight versus cap weighted SPX, right? Like over the last month, and I don't think it's a good way to like extrapolate the market, especially because of the market weighting. But there's people there. There's people that are like, hey, cap or balance or equal weight could outperform. Like they're completely they're oversold compared to market cap weighted. So yeah, it's just a suggestion, man. I would say I love seeing your ETFs being rolled out because some of them are actually kind of funny to me. I said this on a different space, and don't take any offense to it, but I said you're the ultimate. You provide the ultimate troll ETFs, right? Like when those thematics come up, and it's like, you know what? There's something here. Like, does somebody want to kind of like short against this thing? Like, let's see if this roll this out. Let's see if this works. So you're very nimble when it comes to the ETF construction, and you're thinking more out of the box than a lot of these other major players that we know,
Hey,
over the last couple of
publicity is good
decades.
publicity.
Yeah, and again, when you're pissing people off, then you're doing something right.
Exactly.
all right, I guess this did kind of turn into an impromptu ETF pitching space. I have one. If it happens and becomes successful, I want a piece. I'm shocked, and maybe there isn't an ETF that just holds the top 10, top 20, top 25 largest stocks in the world, and it rebalances over time. The NASDAQ 100 is kind of the closer we're getting to that, but more concentrated on these mega cap names, 20, 30 of them, 20 top 25 largest stocks, US listed stocks. I think it would be a pretty good ETF. A little different outside of some of this stuff, but
There are
I could see a lot of people.
there are some private like some specialized private products like inside,
Oh, but
like
that's
asset management
ETFs.
assets. They should ETF wrap
Bullshit.
that. They should ETF wrap that. You're right, because they do have them, right, for clients. So like they should.
I do like that idea, and as a trader, and I'm an options guy. The thought of trading options on that is somewhat more interesting to me than SPY or Qs because at this point, these days, if I'm trading SPY or Qs, I'm trading, I'm really interested in the top 50% of names. I'm not interested in what's 499 and 500 or 99 and 100, and a product that just gets rid of all the crap. That's an interesting idea.
Hey, build it out. I'm here for it. From my perspective as a long-term investor, something I would love to own.
Yeah, because it's like those arbitrary names that are in there moving around with it just because that you sort of have no choice but to hold. Like you sort of get rid of that bulk. Lever up to
SPY
the
has
names.
that. Q's break.
Yeah, lever up to the names you do like within there.
I'm thinking, first off the top of my head is you equally weighted. Because I think what's happening with XLK where Nvidia is going to like 20%. I mean, on the one hand, yeah, I mean Nvidia, but on the other hand, I think it's just kind of stupid.
Right. I'm saying it gives a
Is
levered
there
return to the overall index to the names you like, right? As compared to just holding all 500. I think that's attractive to a lot of people.
is there a way to do it in like baskets? So like the top 10 are equally weighted, and the top 15, and then like 11 through 25 are the same weighting too, or like doing something like that?
You can do whatever you want.
I think that having a little bit increased weighting towards the names at the top of this, and then a little bit less on like 11 through 25 could be something that's interesting.
I think most.
But I'd rather see it just kind of backed up by historical data and kind of how it would end up doing, and pick the right answer there. I've thought about this for a couple days now, actually, and I think I've gotten to the fact that I think I'd like it to be more market cap weighted than just equal weight.
Right.
How would the rebalancing work there too? You just have to constantly sell the winners and buy back the losers, was how I was kind of thinking.
Yeah, I mean, you'd come up with a rebalancing schedule, monthly, quarterly, whatever, and rebalance back to, you don't want to do it daily. I think that would be, and that would generate capital gains that just, if you're competing for eyeballs versus like, SPY and Qs, the last thing you want is to generate a ton of capital gains. I mean, with custom baskets, you could, you know, probably fix that, but then you add them.
Also, how often does the largest 10 companies change that often, right? Maybe 11, 12, and 13 creep in, right, and flip with 9 and 10. But, like, if you're holding the largest 10, you
The
don't
list
necessarily
isn't
have to
going to
have the weight.
change.
Right,
Right.
exactly.
There does come to problems where you can't hold more than 10% of a single stock in an ETF, right? So at that
No,
10%,
I always forget the diversification rules, but there are ways around. It's something like half your portfolio can't. I mean, if I have 25 names from a diversification standpoint, I can make that work.
Right, even if it's 0.1% in those bottom little names, right? Like Noble, I think Noble did that as well, right? You sprinkle a tiny little capital amongst names diversified to avoid a right scrutiny and heavily weight the top.
But here's the question: 2x or 1x?
I think 1x first, and if it goes well, you get to the 2x,
Why
my
don't we
opinion.
call it 1.5? Just, happy medium.
All right, go
Yeah,
for all of them.
yeah. I mean, we probably file for all of them and just then decide what to
Down the
launch.
road in the future, there's going to be a scale, and you're going to be able to just slide the scale to the exact leverage you want. You're like, oh, with like 2.74x, boom, and it'll price it for you.
I filed for top 10, top 25. I think both of those could be interesting. I think one will end up winning out. I'm not sure which one, but yeah, this is something that I've been thinking about that was exciting for me. Kevin, I see you had your hand up.
Yeah, one second.
I just
Yeah, no worries.
So
say
Matt,
thank you. Oh, good.
oh yeah. So Matt, I was wanted to, I wanted to ask you this question, right? When you're doing these 2x leverage ETFs and things of that nature, have you seen a situation yet where you see like a massive unwind or massive outflows? And how difficult is it for you to adjust those swaps or to adjust those derivatives products in order to do so? Like, basically, I'm asking when we have these melt ups like an NVIDIA, right? And if you have a product that's trading in an NVIDIA or something that's just melting up pretty much every single day, where realized vol is higher than IV, is it getting more expensive for you to the upside for a lot of these products? And does it get really more expensive to the downside as well? Like, how volatile is the pricing structure for those swaps in very volatile markets, whether upside or downside? I'm just curious.
Yeah. So the downside doesn't matter. If Nvidia tanks and and we have outflows, that's just basically selling swaps. That's not a big deal. The upside is a pain in the ass because basically what you're asking your counterparties to do is to continuously be adding Nvidia to their balance sheet. And at some point, a counterparty shuts off. So, for example, one of our counterparties has been shut off on NVIDIA for, I don't know, probably 4 months, where we could not even go to them and buy one share of NVIDIA. From a firm standpoint, none of their desks are allowed to own any more NVIDIA because they have more NVIDIA on their balance sheet than they want.
I assume that gets expensive for you then to have to source elsewhere, right? Right, almost at the market, or is that it
So
becomes an expensive swap?
where it gets more expensive. So I mean, basically, we've got a borrow rate at every counterparty for every name, and the Nvidia borrow rate, pretty much across the board, is more expensive than Tesla, Apple, Microsoft, Google, all of that. And the more Nvidia goes up, the more expensive our borrow rate is going to be, and the more every day is going to be counterparty roulette, begging people, threatening people, all of that to get more Nvidia exposure. So it is definitely more of a pain in the ass with NVIDIA going up. I would love a day where NVIDIA goes down 8%, and and everyone could kind of
That-
rejigger.
That borrow is on the swap line, right? You're talking?
Yes.
Got it.
Do the two portfolios, so you have a 2 times long, 2 times short, for your business, right? Does that also kind of put you, I won't call it delta neutral, but does that neutralize upside downside potential for you, or do you have to keep them separate? When I say separate, meaning do you have to consider them to be separate in a sense for like reporting person? Does that kind of make sense? Like you have a short and you have a long, are you able to offset
Are they
some of
priced
that
on the
risk for your
swap?
position?
Right.
Right.
Priced
Are
on
they
the
on the use
swap.
the same swap? Right.
So to an extent, so we've got like one counterparty, for example, that from time to time will come to us and say, hey Matt, today we can't give you any more long NVIDIA, but if you've got short NVIDIA to do on NVDQ with us, whatever amount you've got to do short will allow you to do long on NVDX. So sometimes we'll play that game. From a business standpoint, I would love for both of those funds to be somewhere near equal, or also would love for, anytime we have an outflow on NVDX, it goes into NVDQ. Doesn't work out that way. I mean, NVDQ, we've got like 30 million in, and NVDX is like 700.
Right. Wouldn't it also assume the same counterparty on both sides of both all those trades in order to keep them in the same swap, the up and down, act like 2x up, 2x down, would assume you'd have to have the same counterparty if it was priced in that one swap, right?
Well, no, they're separate swaps. I'm just saying we've got one counterparty that's like, hey, if we're selling some NVIDIA short, we'll give you that capacity on the long side.
All right, this was a fantastic conversation.
Greatly appreciate it, man. This is insight, like greatly appreciated.
No, I definitely enjoyed this conversation a lot. Everyone should make sure they're following Matt. I also started a shout out. I started a new ETF tracker account, which you'll see some of his stuff. I'll be talking about some of the ETFs on there. So that ETF tracker account, make sure you're following that. And then this ETF hearsay by Henry Jim account down below as a listener is fantastic. All he does is tweet about these new ETF filings that come out, and I enjoy following him. So that's also a fantastic follow. But I always love watching what you're doing, Mr. Tuttle. It's really interesting, and like Kevin said earlier, it's cool that you think outside the box, and it's not kind of the third ETF in the same space. It's trying something different, whether it's a completely new area or new stuff within a space. I always love watching what you're doing, and love to have you on some of these spaces again. Brendan?
I was going to say, a troll needs to be willing to be vulnerable, but it's hard in open markets like this, so I give him credit.
Hey, it can be profitable, as we've seen when you hit it. But any final words from you? Appreciate you joining on. Would love to do something like this again, maybe closer to when some of these stuff comes out, or more filings or whatever. But any final words? Appreciate you joining in as always.
No, I mean nothing I can think of. Glad to be on, and happy to come back anytime.
Awesome. Appreciate you.